Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems you could. By the way, this picture of marigolds is looking out of my trading room's window. I like that view. When do you look to buy in a specific market pocket? There are times when the market is so bullish that everything is going up. At those times, you may not need to be, you can be, I am, but you may not need to be very selective to make a profit. At other times, like now, only some pockets may go up and you may buy only in those, if at all. What are the possible market pockets? It could be one of several things. Let me cover some of them. Of course, many others are possible. Pocket could be in terms of market capitalization. If mega caps are leading, you buy those. If small caps are more likely to go up, you focus on them. So on and so forth. Pockets can be laggard versus leaders in terms of price moves. If you think it is time for money to rotate out of past leaders into past laggards, you may look to buy stocks at a lower price level, but you may not want to catch a falling knife. I do not. Instead, look for low risk buy candidates with proper setup at a lower price level. Using Q Finder, it is easy to locate those. A couple of days ago, I shared a similar trade idea on the Indian market. The technique is the same in all markets. I will go back to that stock sometime today if I remember that. You may prefer one pocket over the other. Okay, there was another slide somehow that is missing. No problem. The other pocket that I wanted to cover was of course sector industry. I use Q edge to look at the stronger or more accelerating sector industry and prefer to buy in that. That is one important pocket decision for me where to buy. So it can be in terms of market cap, it can be in terms of laggard versus leaders, it can be in terms of industries, it can of course be in terms of value and growth. You may prefer one pocket over the other in each of those dimensions. Dimensions being value versus growth, industry, lower price level, higher price level, mid price level, and market cap. You may combine the preferred pockets in all these dimensions to create a buy watch list or candidate list. Later today, we'll try to find at least one buy setup like that using live queue systems. Which pocket will that be in? I don't know. We'll decide that based on the preferred pockets in the current market situation. What is the market situation now? We'll find out soon. Greetings. I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using only one trading system. Simplifies my life. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably, all of which are open to the public. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. It has multiple components. I'll use several of them in today's session too. Let me first go back to one of the stocks I shared on Twitter recently. That was a healthcare stock in the Indian market. It was Dabur, D-A-B-U-R. The ticker symbol is DABU. And let me go to the weekly daily at a glance. Weekly was at long-term support. It is still there at the support. Daily was also at long-term support. I identified it sometime here and shared it publicly at that time. Since then, the Indian market is pulling back, but this stock is holding steady. This would be an example of buying a stock at a lower price level with some attractive buy pattern, weekly daily support. That is, it would not be catching a falling knife. When I shared it, I bought the stock as well. I am holding the stock. In terms of sector industry, it is in healthcare sector which was lagging. Now it is not going down as much as it was going down earlier. You can see that. And it is probably more of a defensive, not probably, it's a defensive sector stock. Market cap, I have to check. I don't remember. It's an Indian stock. But that is how one would select stocks in the pocket that is in favor now. Though Indian market pulled back, this stock did all right. We'll try to find some buy candidates in today's market condition. How is the market condition? Let's look at that. Q charts of instruments that often move the market. Dollar index. Weekly is bullish in shape and color. Daily is also bullish. It has multiple trend line supports. In the last market recap, I mentioned that even if it were to pull back, it would most likely find support in one of the trend lines. So this pullback did not break any of the trend lines. It is bullish and it is overbought as well. But it is bullish, there is no bearish signal. Mega cap index, custom index. In the weekly, up, let me draw it again. In the weekly, after the bearish indecision cluster, it has bearish backdrop color now, and it broke the trend line support in weekly. though it has a somewhat long lower tail. In the daily, we can see it is underperforming the market. That is happening for several weeks, and I have been showing that and specifically mentioning that for several weeks now in market recaps. It created a lower high and came down, and it stopped at the yellow direction line support and also at the trend line support. Therefore, in daily, it is in a triangle pattern. If the memory resistance is broken, I will look to buy. If the memory support is broken, I will look to short. At present, I will prefer to stand aside from mega caps. That is from the mega cap index view. Last week, I did trade mega cap stocks from the bearish side. Why? I shared not only the mega cap index but also the mega cap ETF MAGs in the last market recap, and this is a snapshot I shared in the last market recap. I pointed to the bearish headwind. It broke the trend line support here at that time. This is where price was last Friday. It had a very bullish move in mega caps on last Friday, 1 week ago, not this week, 1 week ago. And in spite of that, what I hypothesized in the previous market recap is that it was probably going to fail at the trend line resistance and go down. And if it did that, right at or near the trend line resistance would come the low risk shorting opportunity. This is what I mentioned in the last market recap. How is MAGS today? After the bearish indecision cluster, we have the bearish backdrop color. Weekly is bearish. MAGS is also underperforming the market for several weeks. And indeed, when price came to the trendline resistance this week, remember, I shared my bearish view from trendline resistance when we were here. And this week it stopped right at the trendline resistance, displayed a bearish flow, which would mean it gave a flow trend following short setup and price came down. If you were ready, I was, you could take the short trade right on this day well before the close of the market. You would get a much better feel for shorting MAGs. I did not short MAGs. I shorted some of the mega caps throughout the week and made a nice profit in that. Those were fast trades. I closed all of them. Why did I close? Not only the mega caps, but I closed all my bearish trades. It will be more apparent as we proceed in the market recap. In daily now, it has trend line resistance, but it has yellow direction line support. Therefore, MAGS is also similar to mega cap custom index. I am willing to buy if it can break out of the trend line resistance. I am willing to short if it can break below the yellow direction line. Right now, it's not giving me any directional preference. Q market breadth internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market. Percentage of stocks above 50-day moving average. The yellow line is still steadily coming down, creating lower high, lower low. That is bearish. It is approaching but not yet there at the oversold level from where a bounce is expected. If we look back, it displayed a series of confirmed Hindenburgs. We saw earlier in market recaps, those came both in NYSE and NASDAQ. It also gave the irrational exuberance signal, thanks to Mr. Ian Woodward, who invented that, along with few other signals like bingo that came later. May him rest in peace. Those signals would give rise to the possibility of a market pullback, and a pullback happened, not a very large drop, but a pullback happened. The pullback came with bingo, extreme bearishness. If that came at a lower price level, I would start to look to buy following a follow through day, but of course it did not come near the low, it came near the high, so it was not time to buy. Interestingly, after the bingo days, for several weeks now, the total view custom index is moving sideways. This week it tried to go up and came down, followed a pattern very similar to the mega caps. That is why I study the mega caps, the custom index, because they have tremendous influence on the market. Made a swing high, lower high, and pull back. Pull back, but it is moving sideways. And the other important and useful and profitable oscillator, thanks to Dr. Jeffrey Scott, after watching him, I incorporated it in this view, 3-month new high low. It is bearish and approaching oversold level from which a recovery is likely. You see, going back, every time it hits the oversold level, it tilts up. It happened every time in the past, and every time it hit the extreme overbought level, it comes down from there. It is approaching the oversold level in both the oscillators, but not there yet. And one thing of interest to me, I noticed it, that though market is feeling like bearish, especially if you bought the stocks that were going up with mega caps. Now mega caps pulled back, those were also pulling back, but we had no distribution count in any of the major indexes or composites. So it may feel very bearish to some of the traders, but there is not heavy and deep selling anywhere. This chart itself does not tell me to buy or short. But if I look at the at a glance view, that is telling me something else. At a glance view of total view, the broadest view of the market, weekly is very bearish, almost a bearish engulfing pattern. Not exactly that, but almost. Very bearish shape and color. And in daily, here we have a breakdown from a triangle pattern with a bearish shape, bearish color candle. That is looking bearish, and this chart allows me to short. Is it too oversold to short? That we'll find out soon. Looking at composites now, Nasdaq and NYSE, the percentage of stocks above 50-day moving average coming down in both the pockets. These are also pockets. I talked about pockets today. These are also pockets, and both the pockets are coming down. Total view is coming down in this indicator. This is an important indicator. 50 days moving average is looked at by many professionals and lot of retail traders. Probably all of us look at that in some way or other. And if the percentage of stocks above 50-day moving average is steadily coming down, it cannot be bullish. In NYSE, it is moving sideways, similar to how the total view custom index is moving, but in Nasdaq, it is still sharply coming down. Approaching the oversold territory, but still some distance away from there. And for 3-month new high low, NYSE is already extremely oversold. Nasdaq is very close to that. It will let us buy provided it tilts up. That has not happened yet, but it is looking quite oversold. Difficult to short in such an oversold market. And if I look at the major indexes, Dow Jones Industrial percentage of stocks above 50-day moving average already extremely oversold. Same for Russell 2000, S&P 500, S&P 1500. And for 3-month new high low, all the major indexes are already extremely oversold. Buying will be permitted if, again, some or all of them start to tilt up. It looks like too late to be short now. If you already shorted something, you are holding that, that's good. No need to probably close those fully. I closed all my bearish trades, but probably it was not required. I could hold on to partial profit in some of the trades. I did not. We are all different in how we actually trade. I booked a nice profit, but it is looking oversold. Quite so. Now let's look at the market external view. This is how most people around the globe see the market. Few things to note. This is weekly finder on QLE trade station using radar screen. This week everything is down quite a lot. IWM down, you can see it better here, 3.3%, the worst performer. DIA, the best performer, is also down by 1.8%. Very bearish week. Looking back, SPY and QQQ are now down for all the periods from week 1 to week 6, 1.5 months. And DIA and IWM are now down for all the periods from week 1 to week 12. That is 3 months period. That is very bearish for DIA and IWM. So now, in terms of pockets, industrials and IWM small caps would be considered laggards. If I plotted mid caps, probably they would also be laggards now, relatively speaking. All are bearish, but industrial, small cap, and probably mid caps would be laggards now. The actual market ETFs, DIA, bearish in weekly color shape. On top of that, it has displayed a reversal candle at price extreme high. That is very bearish. Doesn't allow to buy at all. In daily, it is underperforming the market. It has a bearish flow, bearish shape color on Friday, and it broke below the trend line support. That is a breakdown plus a flow short setup. But it is happening at the lower boundary. That is where I am reluctant to short. It is a bit oversold for swing trading, for shorting, but it is very bearish. It is the most bearish of the market ETFs in terms of at a glance charts. If for some reason it can break out of the trend line resistance, that is break out of the triangle pattern, I'll be happy to buy. Will it break out? I have no idea. This is in fact the weakest of the market ETFs. Something will change, I don't know. It has a watermark support, but that will not be enough to suddenly go up and break out of the trend line resistance. Some news, some event may have to happen for that. This does not look like to be the strongest pocket to buy, coming back to the theme of pockets. Next one, SPY, is looking very similar to DIA, but it is actually SPY. Very bearish shape, bearish color in weekly, similar to DIA, has a reversal candle at price extreme high in weekly. Also gave a bearish flow and broke down below trend line support. Therefore, it gave a flow trend following short setup as well as a breakdown short setup on Friday. Again, it is at lower boundary. I am usually reluctant to short for swing trading at that point. But this pocket is certainly not one where I would like to buy now. Buy now meaning buy as of Friday's close. If again for some reason it can break out of the trendline resistance, I have no idea whether that will happen and what will drive that sudden up move. I don't know. But if it happens, I'll be happy to buy. But now certainly it is not the pocket to look to buy. QQQ, less bearish than SPY and DIA. Interesting because mega caps were bearish and MAGs actually broke down below support, but QQQ did not, which seems to show that large cap tech stocks other than mega caps are stronger. Weekly is still bearish in color and shape. We don't have a reversal candle unlike DIA SPY, and here it nicely stopped. Tough nuts to crack, isn't it? Right at the trendline support. It has a lower tail. Now, even if it goes up from here because of the trendline resistance, I am not going to buy unless it can break out of the trendline resistance. If it goes down from here, there are other trendline supports. It will not be easy for me to short. Even if the next trendline, the two trendline supports are broken, by the time it happens, if it happens, price will be well below the lower boundary. I'm reluctant to buy, reluctant to short such oversold instruments. It is of course underperforming the market. So on short side, I don't see much possibility of shorting right now. It has to break down below the support, come back somewhat, and then till down again, giving the next flow trend following short setup. Whereas on the upside, if it can break out of the trend line resistance, if it breaks out of the trend line resistance, probably DIA and SPY will also do the same. But as of Friday's close, this pocket is not one where I'd like to buy. Next pocket, IWM. This is looking stronger. I actually intentionally shorted the market ETFs in terms of more attractiveness in terms of buying as pockets. Here, the weekly color and shape is bearish, but it again stopped right at the tough nuts to crack memory trend line support. Tough nuts to crack memory trend lines. That was the theme of previous week, and it stopped right at the weekly as well as this daily trend line support. It is at jump thrust low. It is underperforming the market, but it stopped right at the support, and it has no trend line resistance nearby, not like QQQ. QQQ found support in daily, IWM found support in daily, but QQQ had trendline resistance nearby. IWM does not. Therefore, in terms of pockets, I favor buying or looking for buy candidates in this pocket over the other pockets. You may think of market cap, you may think of index constituents. Those are different possible pockets. So I'd like to buy in small caps if at all. That would also mean I am looking to buy laggards because IWM is now down for 1 week to 12 weeks. It's the most laggard of the market ETFs. So I am going to favor laggards looking at that if I am looking to buy in small caps, and the IWM at a glance chart supports that. No trend line resistance. And there is one more market ETF. I don't share it in every market recap, but I shared it in the last market recap. Repeating that this week, mid cap, mid. This is mid because I'm using Metastock for Q Global. I'm able to see all the market indexes all over the world, or futures or stocks, everything. So this is mid cap index stopped right at trendline support in weekly, similar to IWM. Stopped at daily trendline support, similar to IWM. At jump thrust low, similar to IWM, but there is something that is more attractive than IWM. What is that? You probably already noticed it. I marked it. The bearish flow is same as in IWM, but the relative performance is tilting up. If I go back to IWM, in IWM, the relative performance was tilting down. Back to mid cap again, here the relative performance is tilting up. That is how you and I can find the strongest of the market pockets for buying, if at all we are buying. Of course, all of them are down. Mid cap is also down on Friday. Mid cap is down for the week. But if at all I am willing to buy, probably I'll look for mid cap stocks. Why not? In a strongly bullish market, I am not required to be so selective, but this is not a strongly bullish market. If anything, it is bearish market. I am required to be selective if I am trading to make a profit. So mid cap is my pocket of choice. Laggards is my pocket of choice, and probably not stocks at a high price level. Why? Because mega caps were at extreme high price level. They are pulling back. Along with that, stocks that went up with mega caps, whereas stocks like I showed in Dabur case, though it was in India, the same rationale applies. The laggards, some of them may be giving lucrative buying opportunities. That is price extreme low or price extreme middle, not price extreme high. We'll come back to that topic later. Continuing at the market level, QH bucket analysis, again thanks to Dr. Jeffrey Scott. Bucket analysis pinpoints reversal points with remarkable accuracy. At the market level, I would even venture to say this has the most accurate and immediately actionable analytics than anything else. More than 3-month new high low, more than percentage of stocks above 50-day moving average. Why? Because percentage of stocks above moving average, 50-day moving average, very accurate, but it is longer term. Once it is extremely oversold, we are able to buy many stocks, but it is longer term, does not hit the oversold situation so often. 3-month new high low hits the oversold overbought condition more often, much more often than 50-day moving average indicator, but it does not bring the whole market up with it when it goes up. That is 3-month new high low. But bucket analysis, when it hits the oversold level, extreme oversold, not one or two stocks, not the indicator, but a lot of stocks recover from below lower Bollinger Band. Remarkable accuracy. Let's look at that. Last week I showed it was not oversold. This week is it oversold? Q bucket analysis has two ways to assess oversold situation. This is Q edge. One is percentage of stocks below lower Bollinger Band hitting 30 to 40% level. In that way, it is not extremely oversold yet. But there is another way, that is when the percentage of stocks below lower Bollinger Band suddenly in one day goes up by more than 10%. That happened on Friday. From Thursday's percentage of 0.7, Friday it became 15.3. That is, too many stocks fell down sharply at a lower price level, went below lower Bollinger Band. And also we can see for mid Bollinger Band, percentage of stocks below that went up by much more than 10%. So it is extremely oversold. You may say in a sense of exhaustion. It is probably exhausted due to falling too fast, too much. And a tilt up from here will allow us to buy. Even though the percentage of stocks below lower Bollinger Band has not hit 30 to 40% level. QH again, sector industry stock breadth. It shows where the market came from, where it is now, and where it may go next. Proof of pudding is in eating. We know that. Last week, this is the snapshot I shared of sector industry stock breadth. And in that market recap, Friday 1 week ago, I showed from bearish, it turned bullish from 1 month to 10 day. 10 day to 5 day, it turned bearish again. And 5 day to 2 and 1 days, it was bullish. So as of Friday 1 week ago, I was allowed to buy, but I made a comment. And I quote, this is exactly what I said in the last market recap. If it turns bearish on Monday or Tuesday, that may allow shorting. That is what I mentioned in the previous market recap. If it turns bearish on Monday or Tuesday, that may allow shorting, and that indeed happened. If you are following me regularly, you would know in the last market recap, I shared only buying ideas, but I made this comment, and also in the market summary, I made the comment that if the market tilts down, that will allow shorting. And if you followed me on Twitter, you would know throughout the week, I shared many bearish tweets. I switched my view from bullish to bearish based on what I saw in real time, and those bearish trades were very profitable. This is what I shared in the last market recap. If it turns bearish on Monday or Tuesday, that may allow shorting. How is it today? Very bearish. Across the board, from 1 month to 10 day to 5 day to 2 days to 1 day, everything is bearish, so much so that it is looking oversold. When all or most of these pie charts are 80% or so bearish, red color, then it is extremely oversold. It is extremely oversold. That's why one of the reasons why I closed my short positions all with a profit. Now, the more we go through these analytics, you can see why I was closing my bearish trades with a profit. I shorted them, I think probably well ahead of many others, and I booked profit when others probably are turning bearish because it is looking oversold from many angles, one after another. We saw that in market breadth. We saw that in the market ETFs near support, some of them, and now we see that in bucket analysis. We see that in sector industry stock breadth, so oversold. But it does not allow buying yet. All the angles are saying if it tilts up next week, I'll be happy to buy. Q finder technical breadth, we only profit by buying stocks going up or shorting stocks coming down. Technical breadth shows the overall posture to adapt by your short or stand aside and allows easy drill down. I'll probably use this feature today also to find low risk trade setups. Weekly, again, once all the pie charts are hitting 80% level, it is extremely oversold. It is now extremely oversold. Bearish but extremely oversold. Yet another reason I did not want to hold the bearish trades, and I am very reluctant to short now. Daily also bearish, does not allow buying at all. But if the market goes up from here, all the dimensions are saying that at least an oversold bounce is likely. Likely does not mean guaranteed it will happen, but if it happens, I will not mind taking low risk buy trades. Market summary, the most important trading decision is whether and where, which pocket for example, to buy or short, or whether to stand aside. What is that view today? Q market level summary, the market is bearish. No other way of putting that. It is also extremely oversold from multiple angles. Market breadth, bucket analysis, sector industry stock breadth, weekly technical breadth. That may make it too late to short. If I short still next week, if the market continues to go down, those may be very fast trades. I will not hold it for longer time. I'll try to book profit quickly. On the other hand, some pockets are ripe for buying provided they tilt up next week. First preference is mid cap followed by small cap. I may wait for that next week for that possibility of mid and small caps going up and then buying into one of those pockets rather than looking to short an extremely oversold market. Review of last week's trade ideas. I shared 3 buy ideas: CLSK, TRN and ALSN. Let's look at them. CLSK, clear sky. It had a trend line support and it had a breakout setup on Friday last week. I shared 3 buy candidates. I also asked which one would you prefer, if any, to buy. I did not prefer this one myself. I did not buy it. If anybody bought it using similar Q analysis or other analysis, they would still be in the trade. It did better than the market ETFs because it did not go close to the low of the previous week and the supports held. It did not hit the profit target, it did not hit the stop, one would still be in the trade. I did not buy the stock. TRN was the next stock. TRN and ALSN both were in the same industry, same sector, industrial stock. TRN is one stock I bought. This was Friday. I did not buy it on Friday. I bought it on Monday using real-time charts. And as I showed you, as you saw from my tweets, my market view turned bearish next week, starting from this day. This was actually 7th January. My market view started to turn bearish. I took many bearish trades, but I don't exit my bullish trades once I entered them. So I let it play out. And the stop was hit on this day. I was stopped out. As you can see, on a closing basis, it would not hit the stop. If my market view was not bearish, I would probably wait to see if the close is below the stop. That did not happen, but my market view was bearish. I was making a good profit from the short trades, so I did not mind letting it take me out on an intraday basis. I made a small loss in the trade. That is a constant in all Q trades. The stop loss is narrow, so I got stopped out. That is also a very important characteristics of successful swing traders. They never shy away from stopping out, never. They know that the best decision they can make if the trade goes against them is to cut loss as soon as possible, and the Q protection level tells us when it is time to cut loss. ALSN, Elysian Transmission, was the other stock I shared. Also had trendline support. I identified the trade on this day. Again, that was Friday. I did not buy it on Friday. I bought it on Monday using real-time charts. Here the stop did not hit, and I am continuing to hold the stock with a very small loss. But anyway, it did not hit profit or loss, profit or stop. You can see the protection level. It did not hit. In fact, when my market level view turned bearish on 7th January, I put GTC OCO order stop and profit taking for both ALSN and TRN. For TRN it was hit, for ALSN that was not hit. Why did I place the two orders without waiting to see the closing? Because I was busy taking short trades and making a profit in them. I did not want to also keep an eye on these two long trades which were by that time against my market view. So in any case, I am holding ALSN. Again, I'll not mind stopping out. I have the GTC OC order in place. I did not take it out. So I'll not mind getting stopped out if it does that next week. This week's theme, when do you look to buy in a specific market pocket? This market is certainly such a market, not so bullish, actually bearish across the board, but some pockets have better support and less resistance than others, and mid cap is the pocket I favor most because of the analytics I shared. If so, why not look for buying ideas from mid caps? One way to do that is to start with Q index and find the constituent stocks of mid cap index, but that will not give me all the liquid mid cap stocks. Index has only certain stocks, not all the liquid mid cap stocks. So a more expensive way is to use Q finder. Let's do that. I run Q finder on all liquid stocks. And yes, again, you can see once again, the market is bearish, but I am getting ready to buy. Why? Because it is extremely oversold. The same thing happened at the market top. Market was bullish, but I was looking to short. I made a profit in them. Nice profit in most of the trades. I shorted near at the top. Now it is opposite. Last week also was opposite. I bought some stocks. The market was not so bullish, but I bought based on support. And this week market is bearish again, but extremely more oversold than last week. And you can see thin slices of green are there across the board. Let's see what the 360 degrees analysis leads us to. 48 possible buy setups, but I would not like to buy stocks at price extreme high. Instead, I would like to buy stocks at price extreme middle or low. That is my selection of pocket this week's theme. Let's calculate the fundamental scorecard of those stocks. $37 stocks only at mid or low price level giving possible buy setups. Of course, they are all up. That's why they have possible buy setups. Let's look at their scorecard. Because the market is quite weak, let me only focus on stocks that went up by at least 1%. Not just went up, but went up by at least 1% on Friday. Let me also look for stocks as usual, at least 1 star. This is not a very bullish market, not at all. So I am not looking to find diamond or 3-star buy candidates. I am content with finding 1 star, that is either undervalued or having high earnings growth, not both. And to be on safer side, let me look for stocks with improving earnings growth. Let me also use the smart filters a bit more. So I'm going to click these 3 buttons one by one. Stocks up by at least 1%, either undervalued or high earnings growth, and then earnings growth going up. Left with only 12 stocks. Let's look at their industry score. Click the green button, either strong or accelerating industries. Look for stocks only in those industries. Again, in terms of industry, I chose the pocket that is attractive to me. Not all industries, but the pockets, the industries which are either strong in relative score or accelerating in relative score. Choice of pockets again. I have only 8 stocks now. Let's look at their trade setups. All of them have had possible buy setups, and These are the stocks. We could open all of them, but to save time, let me just open the stocks at, okay, no, sorry. Let me show one more thing. In terms of pockets, I came back here to show the usefulness of the scorecard in selecting the right pocket. We had 8 stocks. What were these 8 stocks in scorecard? They were stocks with possible buy setups. They were up by at least 1%. They were either undervalued or high earnings growth. They had increasing earnings growth, and they are in strong industries or accelerating industries. But there is one more pocket selection we can do from here. The color code shows whether it is large cap, mid cap, mega cap, small cap. And as I mentioned, I would prefer mid cap. There is one small cap also, but mid cap was clear favorite in terms of technicals. So I would like to look at only those stocks. Again, choosing the best of the best pockets in all the dimensions. Now I am left with only 3. So using this 360 degrees analysis, starting with thousands of stocks, liquid stocks, I found the strongest pockets in all the dimensions. I am left with only 3 stocks, and it looks like, if I go back, I want to show you one thing. You know probably all these stocks: SIG, FIVE, and CPRI. You probably know, but I would like to show again. These are the 3 stocks. What are the industries they are in? And you may see how easily I am navigating between the different applications. I want to show you one thing. They are all in the same sector, consumer cyclicals. That is what I found. Now, if you do all this 360 degrees rigorous analysis and come in the end to only 3 stocks, and all of them are in the same sector, you probably have more conviction. I do, in buying at least one of them. So now is the time to look at their charts. Let's see now, in terms of charts, will I have one more favorite than the others? This is SIG Signet, stopped at the watermark support. Okay, it looks interesting, so let me keep this one. I look at it using weekly, daily. That was SIG. This is CPRI. Has a nice breakout, has big move up 3 after jump thrust low, price extreme low. So this is looking quite attractive, but I need to find out what happened here. This large gap, was it earnings or something? I have to check that it is not something very detrimental to the company's business. If it is earnings, that is understandable. We have to look at it. Without looking at it, I am favoring SIG a little bit more. Let's look at the last stock. FIVE has trendline resistance, though it has support and has bullish flow, probably a flow trend following long setup, but has trendline resistance. So looking at these 3, I don't mind looking at CPRI, but I have to find out, and using icon I can easily find out exactly what happened on this day. I'm not going to do that now, so let me stay with SIG and look at it using weekly, daily. Great. Weekly stopped beautifully at longer term support. I like that. Daily stopped near, but it did not hit the support, but that is fine. Every weekly trend line support is there in daily also. It might have created a false downside breakout. That's why the daily is not appearing anymore, but it stopped at the watermark support created a false downside breakout with bull release signal. So it is giving a box long setup at or near jump thrust low at price extreme low. Bull release has high volume. In fact, it has a bullish reversal on Friday, and Friday the market was very bearish across the board. This stock found support and it gave a bullish reversal candle. This is a stock I would not mind buying next week if it continues to go up. I did not buy it on Friday, but now is the time to look at its one page scorecard. I came back to the industry once more. It is one of the strongest in terms of score and it is one of the most accelerating in terms of pace. I like this pocket, and in terms of actual percentage move up, this industry went up on Friday, bucked the market trend. I like that. Going back to one page scorecard, undervalued, short squeeze potential, improving earnings growth. That is what I looked for. In fact, it has improving revenue growth also. Funds are accumulating. It is a profitable company. I like that, and I noticed the earnings is in March. Last step is to look at its seasonality, not a make or break decision from there, but I would like to see how is the seasonality. And earnings is in March. It has bullish seasonality in March. I like that. So looking at all the angles, all the pockets, if I had to buy any stock on Friday, I would buy probably SIG, Signet, which I did not buy, but I will not mind buying it next week if it starts to go up. Cool, isn't it? How to find stocks in the best pockets across all the dimensions. If you carry out the 360 degrees analysis using Q like that, you will most likely find some days more, some days less, other trading candidates. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next week's session. Have a great weekend, and as I always say, as these live examples I am quite confident shows, there is no reason not to do that. Trade profitably. Thank you.